Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is Morning Forex Technical Report, where I take a look at the technical levels that are driving the Forex market. Let's get started. Before I go there, of course, we're having lots of issues within the financial sector once again. This time in Europe, Deutsche Bank shares are currently trading down minus minus $1.01 or minus 10.83%. We're also seeing shares of BNP Paribas down minus 6.04% and Credit Agricole down minus 2.81% in the U.S. The KRE index of regional banks is currently trading at pre-market $41.82. That's down from $42.24 yesterday, and shares of First Republic are also lower, trading at $12.11. That's below the $12.09. They were trading at $12.53 to close yesterday. So shares in the regional banks are getting hurt. That's leading to lower stock prices. The Dow Industrial Average is down 196 points, which was better than it was just a little while ago. The Nasdaq shares are down minus 37 points. So there is some sort of a rebound here in some of the equity prices over the last few minutes. The two-year yield down minus 17.5 basis points, 3.63%, folks. There's lots of disparity between what the Fed just said a few days ago and what the markets are saying today. Two-year yield at 3.62%. The Fed was projecting a terminal rate of 5.10% for the Fed funds rate. That's 150 basis points between the two-year. So there's a lot of easing pushed into the Treasury market, whether that's flight to safety or flows, or is it the expectations that the economy is going to go off the cliff and we're going to have a bigger recession than anyone ever expected. We'll see. Lots of balls in the air, certainly. So let's get back to the technicals. Take a look at the euro versus US dollar, and on the 4-hour chart here, I have to spread it out. What do we have? Well, we know that in trading yesterday, this area right through here was a ceiling. Broke above that ceiling, and then quickly to the downside. And what was important was to reestablish resistance against that old ceiling here, and that led to the sharp move to the downside. So fast forward to more recently, in fact, last week and this week, market goes all the way up to that ceiling area right through here, that old ceiling area. Let's ignore this extreme, and we found willing sellers against that level, started to push the price to the downside yesterday into the close. We came down below this other swing area, and this swing area again, very similar pattern. Create a ceiling right here. Got a little messy there. Moved up to the upside, tried to hold support against this level, and then found resistance against the level before moving to the downside. So you see the patterns at both here and here, and that's we tried to hold that level in trading yesterday. Could not hold the level. This was the break right here where the market said, we've had enough. Move down to here toward the close, and in trading here today, we're moving further to the downside. Now, where are we heading? We're heading to another swing area here, and again, let's outline these levels here. I could probably go back further, but this is good enough. Nice little ceiling here. Moved above that level. Got a little messy, but reestablished support. Fell below that level. Came right up to it again. This in trading ended last week, and then based against this level to the upside and pushed the price higher. Didn't go that high, but anyway, you get the point. And we're coming back down to this area between 1.0690 and 1.0704. That was a key support level, and you can see we found early buyers against that area. Push the price back to the upside through here. Let's watch the broken 38.2% retracement at 1.0771. We could also take a look at this area through here. This is last week's highs. Why not? They come between 1.0744 and 1.0759. So those would be target levels. See this area as yellow right through here as well. This whole area between this line and this line as a yellow area. Because of the high prices from last week. That's good enough. And in this week's trading, we did find support against that level as well before moving to the upside. So be aware of this level right here. In fact, that's my level. Watch. Stable at 107.59 level. More bearish for the euro versus US dollar. Let's take a look at the dollar versus yen next. And if I take a look at that on the 4-hour chart, Here, what I was looking at in trading yesterday was the this swing area right through here, where we had a number of different swing lows, broke below it, tried to use a resistance, moved above it, tried to use it as support, and then fell below that level. And what do? We came right up into that area, found sellers against that level, pushed the price to the downside again. This is the 4-hour chart. So this goes back to yesterday, and we're seeing this price action trading here today. Now, the low price that we saw yesterday, that also came into another swing area here. You see how these markets, when they're going up and down, they create these levels, these areas. Fell below it here. This was a bad break, failed break, and it ultimately led to that move to the upside here. So what do? We come back and revisit. It's weeks ago. But the market comes back and revisits that level, revisits the level, and then breaks below that level, and we see further momentum to the downside at 129.63 is where the price moved. That took the price just below the low price going over here at 0.129.79. Well, 16 pips below the level, so it wasn't necessarily. You should have seen further moves to the downside here, but couldn't sustain the momentum. So what now? Well, what was once support now becomes resistance in this area right here. Will become resistance now in trading here today. 130.34, 130.60. The price can stay below the level. The bias remains to the downside. So sellers through here are and maybe going back a few weeks are rewarded if the price is able to stay below that level. That would keep the sellers more in control. If we move back above that, we could see further probing to the upside for the dollar versus yen. Let's take a look at the sterling versus US dollar and the gains that we saw in trading yesterday. Remember, the Bank of England raised rates by 25 basis points. It was more of a they thought a dovish hike, however. What do we see? The price moved back down toward the swing area through here. I'm going to go back in time. See this area right through here. I'm going to start putting my arrows in here just to show you, and you can see them, why these levels are developed. We see the pattern. We find a nice little floor, try to hold support, move back above it, move below it, and then then find sellers against it. And sometimes we even come back and test it again a few weeks later or a week or so later. And again, this is a 4-hour chart. And what do we do in trading this week? Moved up to that level and then fell down below that level. Admittedly, got more a little sloppy here, but then tried to reestablish support here, trying to push the price to the upside. Couldn't do it, fell below it. In trading here today, and the market rotated to the downside. Where do we go? Went to this other swing area through here, where we have again. I sound very familiar in the words that I say, but found again support against this swing area. 121.91 down to 122.08. If we break below that level, we then look toward the 121.77.8 level on the downside to get to and through, and then start to look toward this swing area through here. Again, this is the sort of the patterns that we see when the markets are consolidating in ranges. On the top side, if the market moves higher, well, there could be, you could come in here and buy against this support level. Why not? Well, I'll tell you why. The reason is that the risk can be defined and limited against this area. So if the price were to come in here like it did here today, you can buy against this level, put a stop below the level like right here, and hope that the market rebounds like it did. And so you have a nice little low-risk trading opportunity in this swing area against this stop right here. If the market was higher, you have the positive. So in trading today, if the market were to come back down toward this level, you do have an option to buy against this swing area. Of course, the more momentum is to the downside here in the sterling versus US dollar, but that's your choice. As a trader, you want to define risk, limit risk, and accept the risk. So there you have it, some of the looks at some of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye.